So I know I saw some questions in the chat. You guys have any questions for Ozzy? Anything he went over? Anything he talked about? Raise your little digital hand. Calling you guys. You can ask any questions you have. We'll go from there. Yeah, so Michael asked, we kind of answered this. Michael dropped off. How many 8-call investors did you get before writing to these big check writers? Because you're doing mostly friends and family, I'm assuming you really didn't have to go through like the monotonous grind of talking to hundreds of doing the 20 calls per day kind of thing. More or less, it
Right.
was going through my phone book.
Yeah, exactly. That's one of the options my social media team has given me, that they can set up the appointments. But realistically, when I calculated 10 calls a week and maybe close one for 50 or 100,000, it'll take too long to raise money for what we're trying to do. And I think we've got a short window, maybe 12 to 18, maybe 24 months to acquire as many deals as possible. So I'm gonna go for a quicker route with the equity partners and capital raise.
Gotcha. Yeah, it makes total sense. Touched on that. Their name isn't visible. It just says Zoom user, or maybe they signed on a guest account. They said, please explain what kind of broker you can pay a couple of points without running into securities requirements. The only way I know of would be to structure the deal as a JV, the investor being active in the deal, or a fund of funds, or a licensed broker dealer.
Yeah. So there's money brokers that you can go on LinkedIn and you can search for money brokers and equity partners. If you put in equity partners, some very reputable names will come up who have 10, 20 years experience. They can explain the ins and outs and the legalities of it. And it's perfectly legal. And they have fees ranging from 1% to 4%, depending on how much money you want and how good the deal is. So if you've got a great deal, you can negotiate lower terms with the broker and with the investors. If they want 8% pref, you might be able to negotiate 6% pref if you've got an exceptional deal, which is very safe and low risk. Yeah. And they can explain the legalities. I'm not an attorney, but that information is on LinkedIn. Just put in equity partners and capital raisers, and you'll see a bunch of them come up. And they're happy to give you a free consultation.
Great resource. I hope that answers their question. I'm not sure if they're still on the call, but I know exactly what you mean. Okay, Frank, he asked, on the deals you have held for 30 years, were those syndications? If so, how did you cash out your investors, or are they still in the deal?
Yeah, so some of them are still in the deal. A couple of them wanted to be cashed out after a certain period. So me and the other investors put our money together to cash out the other investors. And we wanted to keep those deals as legacy properties because they're in a location. I'm not sure if you're familiar with the Dulles corridor, which is called the Data Center Alley, Dulles Airport, outside of Washington, D.C. The data centers have bought up all the land around here. So it's pushed the value of the industrial flex buildings so high that the returns have become very lucrative, and the locations are so good that we don't want to give them up. And if somebody wanted out, we bought them out. And those deals are now giving us 25 to 35% cash on cash returns, but they're very long-term holds. The thing I like about industrial flex building, to just a quick expansion on your question, is that you get commercial businesses that rent these units. It could be a shipping and receiving company, a logistics company, a dance company, a soccer club for teaching kids how to play soccer if the unit's big enough. And once they're established there, they tend to stay for a long time. It's not like a single family or multifamily where you're renewing leases every year. You have vacancies all the time. You're doing unit turnovers. It's a different animal. We've got some tenants that have been in our buildings for 20 plus years with constant rate increases at reasonable levels so that they can make their business, keep their business profitable, keep the tenant happy. And at the same time, we increase our returns every year. And that's the power of of compounding over long term. So I really like industrial flex if they're in good locations, because those tenants are easy to manage for the most part. And you only have to interact with them sometimes once a year or once every 2 years, or if there's an emergency.
Absolutely. Yeah, I'm not as familiar with the flex spaces. I've heard similar feedback and stories from people because obviously it's a little easier to deal with a company than regular tenants. We've interviewed people recently doing like the triple net leases and things like that, and the turnover rate is obviously like your year to year vacancy is a lot easier to manage, I think. There's pros and cons with both, obviously, but it makes a ton of sense, right? Logically.
Yeah, the triple net part of it is nice because that's what's going into your bank account, into your pocket. That's your net return, because the expenses above that, which are the property taxes, insurance, and condo association fees, maintenance, those are all paid for by the tenant. So if you're charging $20 a foot triple net, that's what you're actually going to receive. That's why they call it triple net, because the other three expenses are paid for by the tenant. Plus, the tenant maintains the interior of the unit, and that's written in the lease. So if the HVAC system needs to be replaced after a few years, that's the tenant's responsibility. So these are really easy investments to manage. The tenants generally stay for years and years. They're higher risk than multifamily in the sense that if there's a big recession, some businesses go under. So that's the inherent risk. But then it comes back to location. So as long as you get a prime location, you're good for a long time.
Absolutely. Yeah. Said. Hillary, you had a question. You want to come on and ask it? Unmute and ask your question, Hillary.
Hi, Aries. Thank you so much for your advice. I have a question. How you're talking about line of credit, and like for example, you do syndication, apartment syndication, you own with other LP. How can you get a credit through that? Or you have to wait until you pay your LP off and get a line of credit?
Yeah, that's a good question. So we did not do a line of credit through a syndication. So we have a real estate investment company that owns a certain amount of properties. And we went to the bank and said, okay, so there's these 10 properties that are under this LLC. And basically we're pledging the assets of that LLC, which are those 10 properties, as collateral for the line of credit. So it didn't have anything to do with a syndication or a fund. It was properties that had zero debt on them, and they secured a line of credit at a very low risk level that the bank was very comfortable with at a very reasonable interest rate. And you only pay the interest. It's not like a mortgage where you're paying every month. When you do a draw from the line, say it's 6 months, you only pay the interest for that 6 months. And then you write a check, pay it back, the interest stops. So that line can be very valuable when you're flipping property.
Thank you so much.
Yeah, you're welcome. Thank you, Hillary. Good question.
Thanks, Hillary. All right. Anyone else have any other questions for Ozzy? Don't be shy. No question is a bad question. No? Okay. I think that might be it. Okay. So we are going to, I don't know if you can stick around. Ozzy, we're going to do breakout sessions. More than welcome to stick around. We're going to put you guys into your breakout rooms. You guys can chat, network with each other. But first, we're going to take a group picture. You guys know the drill around here, Ozzy. We do a group picture every week, and we flex for our group picture. So everyone turn on your cameras. Turn on your cameras. Show me your beautiful faces. I know you guys are all looking pretty today. There we go. All right. Cameras on. Oh, here we go. Yeah, we're seeing everyone's lovely faces. Okay. All right, we flex, Ozzy. Everyone flex. Ready? 3, 2, 1. Yay, awesome.